Hello everyone, you are welcome as we dive into this particular trading course properly. So let's have an overview. This is demand and supply overview. Everything all about trading is all about demand and supply before we now begin to apply different strategy to make money. The major focus of trading is to make money. So let's try to understand the general view of it. The general view of it is represented by charts. When you take a look at this chart right now, as a new person, it will be confusing to you. You see different type of candlesticks, all these things, all these black and white that you are seeing, they are called candlesticks. So it may be confusing. You see that everything is going up, candlesticks are going up, candlesticks are coming down, and all these things might be confusing. So you can learn one or two from the internet, but having a proper understanding of it, that's one of the purpose of this lesson. Okay, all these lines that are going up, they are called price. Okay, this is the high point, this is the low point. Price will come down, price will go up. After it has taken out the high point, it will have a demand. What is left behind and this low point is called demand zone. That's when the price, all those candlesticks you saw right now, when they are going up, and then this one, they are coming down, making low and making high, come down again. Once you take out this low, meaning that the upper zone that is left there is going to be a supply zone, and we want price to come back to that zone and continue to sell. Okay, that is just the general understanding of the supply and demand. Now, like I've shown you before, the candlesticks, they are represented in black and white. There are different colors, but what you have to know is that there are two major type of candlesticks: buying and selling candlesticks. Okay, so when these candlesticks, what I usually use for black is buying, the one for white is selling. So when you see them moving upward, you know that this price, there's high chance that the market is buying, market is going up. And then when you see them coming downward on different type of colors, different type of candlesticks, you know that generally the market is coming down. All right, now I mentioned that price trading is all about demand and supply. Now you may be wondering, how can you identify a demand or a supply from the chart on your trading view or MT5, anywhere you are trading? You see that the candlesticks, they are arranged in different patterns. You see this candlestick is coming down, the other candlestick has this low, this other candlestick is going up, candlestick is going up, they are not going up. When they are coming down first of all, and then they are now making upward movement. So after that down movement and then upward movement, how can you identify which one is your zone? So which is the demand or supply zone? I've made different videos about this. I just want to highlight one or two on this regard. So let's look at these first candlesticks. You see that the first candlestick has a high point and a low point. Then this is second candlestick. Then we have candlestick theory. We have to look at the wick. All this line you are seeing here, all this line, they are called candlestick wick. So when we look at the wick right now, we see that, let me zoom in. You can see it on your screen that this high point from the candlestick 1 and the low point from candlestick 3, in between this low point of candlestick 3 and high point of candlestick 1, cutting across this candlestick 2, you see that in between them there's a space. Okay, in smart money concept, we usually call it fair value gap. So all you have to be looking for when you want to take this particular candlestick 1 as your zone is when the high of candlestick 1 and the low of candlestick 3, there's a space in between them. Then you can now say this is a valid zone. Okay, you expect price to come back to this demand zone and continue to buy. The same thing applies for selling the market too, meaning if you want to sell the market also, you have to look for this particular pattern also, whereby the candlestick 1 high and candlestick 3 low, there's a space in between them. By the time you observe it across the candlestick 2, I hope you get this is candlestick 2, this is candlestick 1, candlestick 3. So all these things, as time goes on, you can easily get used to it. Now What do we say when the candlestick is no longer valid? I mean, when the zone is no longer valid, it's when you now observe that. Let me zoom in. When you then observe that this zone, when you observe that this candlestick 1 high, the high point of candlestick 1, and then the low point of candlestick 3, they have already meet each other. There's no space in between them. You see, there's no space. Everything is already mitigated. That's what we call mitigation. So this candlestick already is mitigated. You can see it has been used, or that it is not fresh any longer. So with this, we can conclude that this particular zone is not valid. That's just how we identify our fresh zone. All right. Now, finally, let's look at the top-down analysis. When you look at the chart, you will see the monthly time frame, weekly time frame, daily time frame, 4-hour time frame, 1 minute, 15 minutes, so and so forth. So usually our type of trading is what we call swing trading. Okay, swing trading, whereby we will trade on the higher time frames. So, and this type of trading, we have to first of all look from the higher time frame down to the lower time frame. So how do we look at that? We'll look first of all from the monthly chart, to the weekly chart, to the daily chart, to the 4-hour, and possibly to the 1-hour chart, just to look for our entry. And all these things, I will explain them as we progress in this lecture. Now, first thing first, you will observe that on the higher time frame, you can have a movement of price coming downward, making a low, going upward, making an high, coming downward again, breaking out this low. Generally, we know that this type of structure is telling us that the market is what is selling. This is selling market, and we observe this on the higher time frame. The higher time frame can be monthly time frame, can be weekly time frame, daily, and so on and so forth. It depends on which of the time frame is your corresponding higher time frame. Then when you observe that, then by the time you come to the corresponding time frame, let's take it like this is your monthly time frame on the higher time frame. Then by the time you come to the weekly time frame, okay, you will see a type of structure on the weekly time frame. Now this is your higher time frame, abi, weekly time frame. Then you come to the lower time frame on the weekly. This is the weekly. You now see that inside this particular structure on the monthly, by the time you check it on the daily, on the weekly time frame, you can have this type of structure. We have 2 low, 2 high, before price is now continuing to come down. So if you don't understand how the higher time frame is moving, it may be difficult to understand the lower time frame also, or you can easily get lost because the higher time frame is selling. So to have a high probability trade, we are going to be looking for selling opportunity also. That's on the weekly. So we have done the monthly, the weekly. Now let's come to the daily. By the time you look on the daily time frame, coming from the weekly now, monthly, weekly, now we're on the daily time frame. By the time you look at the chart, you see that there are a lot of different candlestick formation that will be forming. Now you see in this angle we have the low point, low, low, low. How many lows do we have? 1, 2, 3, 4. We have 4 lows, and then we have 4 highs. You see, when you are trading, you may be thinking that this particular zone is going to be a buying opportunity, of which it can work on a daily time frame. But for a high possibility trade, it's now when we have a selling signal on a daily time frame, meaning that as our monthly is selling, weekly is selling, we now have selling opportunity on the daily also. This is what we call high probability trade, whereby our trade will give us the high possibility of it coming to our direction and making us profit. So that is just a little breakdown of how we can look for top-down analysis to enter our trade. I hope that you can understand this. If you don't understand, from my videos, I've made free videos on my channel. You can go and watch, and it will help you to get this clearly. Thank you very much.